Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my research and if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. Let's go to the Nifty closing on Thursday and review of our prediction. Nifty ended up in the positive 14,581.45, 76.65 points in the positive, 0.53% in the positive. Opened around 14,522.40, which is well above the previous closing, but the market has fallen down initially 14,353.20. High went around 14,597.55. Let's go to our prediction review. In our data, it is clearly shown that the market is having the volatile, and we also given exactly that is the trend. We need to keep both options in hand due to the volatile indications are there, and I'll explain you because whenever we get the data of this kind of a difference of 1 point, other three indications are showing positive, but the indication of 1 is to 0, which is having a difference of 1 point, so which means it is an indication for volatile market. So up and down it will go. So that is where we always get this kind of a volatile market on a specific day, and the market has opened in the positive, but it has fall down and went down 14,353.20, which is in our data. If you see, it is exactly matching in the stop loss range 14,357. So the market has kept that a level as a low because 10 point stop loss in that level means we need to subtract 10 points, so 14,347, so which is not broken the low. So it is exactly matched in that level, but initially the market kept high was not matched. So initially the market has kept the high somewhere around 14,560 range or something, so it is not matched in that particular range. So we know that after the low is matched, each and every time it has kept matching in the data every points. So we know that the market will having the chance to recover and go and break that level, and exactly that is what happened. It has broken that 14,560 range, which kept high in the morning, and that level broken, and it has kept 14,597.55, which is exactly matching in our data in the resistance level 4. It is a meager point, so exactly that is where the market kept high and fall down and the closing happened. So we know that it is going to be a volatile market. Volatile market means the most of the time what happens is it will trade in between the positive and negative range. Sometimes it will break and move towards to the average range towards the positive range. So it is both negative and positive range got fulfilled. Let's go to the group calls. What are the calls we given on the group? And we know all three indications are shown positive, but we expected some kind of a gap up because of SGX Nifty was traded on Wednesday, which is 240 points up. So that kind of a reflection we can see in the Indian market, but at the same time the next day SGX Nifty was around 120 points down, so which means minimum at least 120 points up we can expect it. So what we thought is that the market might have opened in the gap up, if it is in case, because we have that kind of a data. If anything opens in the gap up which is 100 points or 200 points, so it might have the chances to fall down towards to negative or the low. That is what the initial expectation. Or if it is opens in the gap up and it might not break the level of par value, then it has a chance to recover. That is what the expectation. But the market itself opened in the range of flattish positive, which given some kind of a confusion because our plan is something entirely different from the others. So because we expected that this 14,680 might get hit in the pre-opening itself, but that was not happened. But still, as per the data, we need to play because anything opens in between the zone volatile level 1, volatile 2, which indicates that the volatile market, how it is going to trade. So we know it is going to be a volatile market. Whenever we know if it is a volatile market, the rule must have to be you need to keep both options in hand, at least minimum 10 10. That is the scenario, and the same time you need to book profit. So initially we didn't hold any kind of but our plan is always in the put option side because of the levels which we have, the targets bit huge, 13,599 comparing with 14,680. So we wanted to keep some put options always in hand, so which might be helpful for us. So but the pre-open was not up to the mark. So we initially planned in the morning when the SGX Nifty is 110 points downside. So, but still, if anything opens pre-market due to that Wednesday gap up in the SGX Nifty, if it is nearing to not 7.82, you must have to keep put option in hand, 14,600 or 14,550 range, even if it is comes down to 10 somewhere, because the cap up might comes down those premium, it will lowers the premium somewhere 10. It is possible if you're getting it might go heavier, that is the idea, but it was not happen. But still our plan is to keep the next week contract of 14,200 and 14,000 as well, because it might have the chances to go somewhere around 400 to 600 points if the level is fulfilled, which is that gap 13,599. If it is going in this week itself, means these two put options will go that much. That is the plan. But the market is clearly opened in the flattish kind of pre-open, so which we wanted to play a little more safe as well. So the pre-market is clearly shown in the range of volatile, so we need to keep bet in the both sides after the pre-market. That is what the int is given, because of the pre-market is not supported, the level pre-opening is not up to the mark, because we expected a gap up, but it was not that much open, so it is opened in the level of volatile zone. So that is where the clear indication, so you need to keep both options in hand if it is possible, the range of 14,600 and 14,500. But we didn't get at this point at that particular rate. It has been little higher, but still if you want to buy you need to keep both options in hand. It has given that it has fall down heavily. So what we done is we waited because the premium was a little bit higher, so I given only the high risk clients to buy this 14,650 call for 10 to 11, because high risk, because it might go to zero as well. So at that point of time the market has fallen down rapidly fast, so we waited. We didn't bought any put option apart from that those level, because the level of high is not matching. Even in the morning 9:51 itself it has been there, it is not matching at that point of time, because 40,566.80 is not matching on the both levels, so that we found. But still the lower side we need to watch out where it is going to match. So it took a little time to check those levels. So it is not clear that each and every time it has fallen down, so we waited. We didn't bought anything, but we bought 14,500 put option yesterday itself around 175. So I asked that particular to watch out due to that it has gone a bit high. So once it has reached around 224 and above, I asked the client to keep 214. So if it is looking at that particular level also, we'll get somewhere around 3,000 rupees profit, because that is the call which given on 13th April itself. So high risk traders, because that time it was traded on 13th 170. I mean the call while given it was traded around 175, and within a minute it has moved 2 to 3 points. So that is where our idea is to book the profit on that particular, because we know the I is not matching, so that if the stop loss is got it, we would have get 3,000 rupees profit. And exactly that is what happened. Stop loss got it at 24 and then lower side also got matched. So each and every time low is in the range of, I am checking every now and then it has reached that level, and then it has reached 14,357, then only it started to move. So each and every time I have pointed out the low. So low after kept exactly matching, we know that the market is going to reverse from that level because it is exactly matching at that point of time. Even once again it has broken, but still it has matched at that point of time. We wanted to buy this to put, I mean, one put option and call option as well in the combination, because we wanted to go for that 14,680 on the positive side, on the downside 13,599. So if anything goes towards to 14,680, we will exit with the call option 14,800, and keep that put option 14,000, and if it is goes down to this level, it might go to 400 in the put option. That is the idea. So we want to hold those two levels, and at the same time we gone for a hero zero call, which is 14,500 for somewhere around 14 to 16, and target was given open, and whoever bought it and still keeping for a open target. So today it has been around 80 rupees today, but still we exited somewhere around 24 after reaching. Once again we bought it one more time. Once again we bought that particular one more time, which is in the range of 12 to 15, because it has given again one more buy. So this time I clearly given the target as well, 60 minimum. So the zero is the stop loss, you need to buy it. Small traders you can exit somewhere around, because 12 rupees, if you bought 20 22 anywhere, if you are getting 750 rupees, it is fine, you can exit. But the risk trader, take it full and wait for the target, that is the high risk traders call given. So exactly today it has reached that 60, and at the same time the market has gone recovered and closed high, and this target got hit at 3 p.m. It has went even above as well. So it is a good day for us. In the meantime, we wanted to exit from other 14,800 next week, or also we want to exit, but the high risk trader I still asked to hold as well, because it has given somewhere around 60 range, so we want to exit as well. And these are all the range. The high got match in the range of positive average, and this resistance level 4 also exactly matched, because it is on the stop loss level. 14,592 is on the stop loss level, and the market is also matched, and this is where the high is matched perfectly on the resistance level 4, as well as the positive average stop loss level. And let's go to the prediction for Friday. It is kind of a volatile market. Once again it is shown that two indications are in the opposite direction, which is 25% in the positive, 25% in the negative, and remaining two indicate the volatile market, which clearly indicating the volatile market. And these are all the support and resistance levels. So volatile market, we can see the market might oscillate in between positive to negative. Sometimes it will touch the positive and come down toward negative. Sometimes what happens is it might turn around from the bullish level or bullish open target level. These two levels it will try to fall down if it is high is matching, and then it will try to go towards the negative average as well. So it depends on how the pre-market opening is going to be. If it is in between the volatile zone of levels 1 and 2, then it is playing accordingly, so it will have the different kind of move. So we need to watch, you need to keep both options in hand at the same time. These are all the scenarios, it will trade in between those levels of 14,520 and 14,787. These are all the one kind of thing. And then next is 14,860 to 463, those ranges. On the other hand, high range, which is 14,947 to 14,399. So these are all the ranges possible. On the other range, which is minimum of 200 to negative side 200, so that is also possible. This is the another scenario, negative 53 points to positive direction. So this is the another type of move. So we need to watch out how the pre-market opening is going to be, then only we can able to say anything. For example, pre-market is less than 14,000 14,673, less than that if the pre-market is opening, which is 92 point less than that if the pre-market is opening, then the negative target will activate. So we might see a negative target 1, 2 and 3, so which is positive to 53 points in the negative and 118 points in the negative, and then followed by the low 182 points. So we need to watch out. And as expected, we initially told itself the I is not matching. As expected, the I is got it, and then the I is not matching. That is the reason we bought it, that 14,560. That is also we mentioned that. And the Friday extreme bullish market, anything opens above this level, you need to keep stop loss in this particular level. But normally in the volatile market, we cannot keep those kind of extreme bullish stop loss. Sometimes it will hit more, sometimes is most of the time in the volatile market, but still we need to know that, because anything open that above level, if this particular stop loss is not getting it, still it has a potential to go extremely bullish. That is the method. On the bullish market, anything opens even a point positive, you need to keep stop loss in the 14,567.808. And extreme bearish market, anything opens below that level, you need to keep stop loss in this 14,613.32. If it is not breaking that, it is going to be extremely bearish market. And normal bearish market, anything opens minus even 1 point, then you need to keep stop loss 14,652.69. And anything opens in between volatile level 1 and volatile level 2, then according to the market which side it is breaking, then it will act as a bullish or bearish. And but you need to keep both options in hand. And these are all the other steps, which positive average and the negative average. Positive average and the negative average is matching, means the market will fall down from the positive average. In the negative average means market will recover from the negative average. These are all the pending target for the previous month. And always previous month targets, sometimes not getting it, the pending is almost 23 days. So 15,375 is pending and the last month 12th. So we just tracking those high which is breaking or not, because normally in the previous month normally sometimes it is not hitting, so we just tracking for the time being. So this month target which pending is 14,680 and 13,599. This month target we can able to trade, but still you need to trade with a over trade. This is pending for a fourth day, and you need to book profit every now and then, 50% to 100%, because of the volatile market. The price might go down after reaching certain level. So in the volatile market, you need to keep both options in hand, minimum 10 size. But if you are taking somewhere 20 and 30 or 40, that is also advisable. You must have to keep both options in hand. And due to the volatile market, you must have to keep both options in hand. Let's see how the market is going to give us on Friday. And one more important point is that on Wednesday, Monday data is also indicating a bearish kind of data, which is in the negative side. We already took the Monday data, so 1.99% chances to go down. So we plan to buy a put option on Friday itself, if possibly cheaper price in the opening itself, means we can buy, or at the time of closing 3 to 3:15. Let's see how the market is going to give us on Friday. Thank you.